shout out to you guys for bearing with us through all of the technical difficulties that we could imagine to start today's webinar. Something tells me 2024 wouldn't have ended any other way. If I'm being honest, it was quite a roller coaster. I'm excited to be joined by these gentlemen today and get a chance to chat with you guys about being a partner with Rock. We're all extremely grateful for you guys and getting a chance to. Somebody said headphones are essential to Rock. I love it. No, but we're super excited to get a chance to chat with you guys today. Get a chance to kind of explain what some of our initiatives are going forward, and really just deepen the bond a little bit. We're normally, when we join these webinars, it's normally myself, potentially Greg, maybe maybe one or two others on the team. But normally we have like a long drawn out presentation for you guys where it's 15, 20 plus slides where we have a specific topic we're going over. Today, what we're going to be doing is simply targeting getting your questions answered. Right. So today is more of a live Q&A session than anything, where we're going to answer your questions here live on camera. Basically, our whole goal is to answer as many questions in the shortest amount of time possible. To get us started, though, I'm going to take a quick sip of water so that I don't cough into the mic that's not actually working, but get a chance to introduce ourselves. So I'm Tony. I'm our VP of Business Development here at Rock Financial. And if you're new to Rock Financial, a quick overview of what we are and what we do is we help business owners, right? In the simplest term, we help business owners gain access to commercial financing options that help them grow, scale, or even solve challenges within their business. And the three gentlemen around me today, they're three of the best at it. So I'm excited that they're here to get a chance to tell their stories a little bit, some more stories, some wins, and really deep dive into what it means to work with Rock Financial. So right here to my right, I believe you're left on camera. I'm going to let this gentleman introduce himself first. But this is Greg. Greg, go ahead.
How you doing, everybody? Glad to be a part of all. I'm Greg Amendola. I am the SVP of Sales here at Rock Financial. And within my role, I help anybody and everybody. That includes our business owners, our partners, our lending relationships, and really always try to be on the lookout for the best products and programs that we can deploy to our customer base.
Yeah, everything that you see here is Greg touches. I assure you that he's got his hand in everything, and more than anything, we all learn the business from Greg. If I'm being honest, I remember standing at his desk almost 10 years ago now, bothering him, trying to get him to answer my questions, and now I got him here answering your guys' questions. So if you're new to this, really quick, one quick housekeeping item is please throw your questions into the Q&A. I'm sure we have tons of questions today, and those questions are going to be answered for sure, but I want to just be able to answer them in order as they come in. So if you can, throw those questions in the Q&A. I know the chat will get buried quickly, so if you guys can, please throw those questions into the Q&A. Nick, you want to jump in?
Yeah, sure. Hey, everybody. My name is Nick Cantatore. I'm a senior advisor here at Rock Financial, and basically what I do is I help partners like you and deal specifically with the clients that you refer into us and kind of tailor that transaction itself. So I learn a little bit more about what the business owner is looking to use the financing for and pair them with the right lender based on those needs.
So Nick, you work directly with underwriting then?
Yep, hand in hand with underwriting, hand in hand with the partners. Hands are in both jars there.
Yeah, I love it. And then down the other end here?
How's it going, everybody? I am Ryan Baumann. I'm on our partnerships team. So my goal as a business development officer is really to help provide as much value as I can to the partnership experience of Rock Financial. And that's through providing the value through feedback, through education on the products, the process, and really streamlining that process as much as possible.
I mean, there's no two better guys on the team to have join us, Greg, than these two. Really quick, in the chat, if you guys can, shout out to Ryan and Nick. They're our top guys in each of their departments this year, which means technically that they help the most businesses access the most amount of capital through the most partnerships, right? So they're helping the most amount of you guys access us in whatever way, shape, or form that means for you, right? And that's really what I want to kind of dive in with you guys today, and that's why I'm glad you guys are here. Is partnerships are not one size fits all, right? And neither is Rock Financial. So that's what I'm hoping when we leave today's call, we're able to really leave the partners with, is that they understand maybe one or two other ways that they could be leveraging. Hopefully one of you guys, I'm sure you guys have some partners on the call, but just leverage Rock in general, right? How are we kind of different from everybody else? I think that's what makes us different from everybody else. It's the fact that we're not this cookie cutter approach, or this this try to be one size fits all. We're very customizable, and we're very excited to do that and be that resource for you and your customers, the small businesses that you're working with. So again, I'm super excited to be joined by these gentlemen. Nick, Ryan, I mean, you guys had a really unique experience. We funded a really large transaction through one of your partners last month. And I feel like that's a great way to kind of kick this call off, is to just sit back and tell a little story for a second, right? So, Nick, you and your partner have been working together how many years now?
It's been 8 years I've been working with this one partner.
8 years with one partner, and funded hundreds of deals, is fair to say?
Sure.
Funded hundreds of deals through one partnership. And now what do they do? Because a lot of people, what they want to know is, where do I go get deals, right? That's always a question that we get. My answer is always partners. So let's tell them, what does your partner do?
This specific partner, they focus on personal loans and just business consulting in general.
And now where do they get their customers?
A lot of it comes from LinkedIn and just networking with other people in similar industries, but a lot of it's online marketing. It's a little bit of a mixed bag.
Awesome. And now, when working with your partner, they've put you in contact with other partners, right?
Absolutely, yeah.
And now you and Ryan work with this partner together, right?
That's correct.
So guys, really quick, I don't know if you know this, every partner of ours actually gets multiple points of contact on the team. And I'm usually reading that off of a slide. So it's really great to be able to point at these guys and go, hey, these are your multiple points of contact, right? And kind of show you guys the ins and outs of the system. Right. So let's take the next step here. Right. So you've been working with this partner for a really long time. They refer you over a nice size transaction, right? A large business. And how much money did they end up getting?
We funded them for $4.5 million.
$4.5 million. And that was unsecured, right? Not tied to any real estate or any collateral.
That's correct.
Fully unsecured, $4.5 million. And after going to the football game, we won't get into that part of the story, but after getting to meet with the customer, how many days from that point to closing?
I think it was about 3 days by the time we got everything cleared with underwriting and pretty much ready for funding.
So 3 days for $4.5 million. Awesome transaction. Now, where did your partner get that deal?
That partner got it from LinkedIn. It was a partner that he's interacted with that deals specifically with commercial real estate transactions. So they didn't have an outlet for it, referred it to my partner, and then that partner referred the deal in. So we also got two partners out of one there, because he was also able to offer our services to that partner.
Awesome. And now, in this scenario, right, guys, I want to paint the picture for you guys. Nick's been working with this gentleman for quite some time, as has Ryan. We'll get to Ryan in a second. But no, when working with this gentleman, there's a few different ways. Right. Not every deal comes directly from his own marketing. Like Nick mentioned, this one actually came from one of his partners. Right. So Nick was able to work directly with this woman on the transaction for her customer. She does commercial real estate and large residential real estate mortgages, jumbo mortgages, as they call them. So it's really an awesome transaction that moves super quick. And last piece here, how much money did they make in 3 days?
As far as the partner,
Yeah,
I think we paid them out. Correct me if I'm wrong. Was it 60,000?
I think it was about 60 grand. Yeah, I think
Right
it's about
around there.
60 grand. Yeah, in 3 days. So listen, they obviously your partner split it with his partner, right? So there was a couple of hands in the cookie jar, as they say, right? But awesome transaction where you're able to really understand that we can do deals from as little as 5,000 all the way up to $5 and $10 million. Really have the broad range of products to service a variety of needs, which brings me to that point, right? We don't sell cheap money, right?
No.
No, no. What we sell is alternative finance, right? So it's outside of your local bank. So chances are they could have went to their bank and got cheaper money, correct?
Right.
Chances, right? Not necessarily definite, but we're smart. We know where we are in the marketplace, right? So why did they go with us? What was the actual need for the capital?
So it was a little bit more of a unique industry, which a lot of banks didn't understand, or to understand it needed a lot more time. But to go into Tony's need was timing. A lot of these conventional outlets, which you all know, they can take a lot of time to get these types of transactions done, especially for that type of dollar amount, looping in collateral and all these different things to get up to that dollar amount. But for this specific need, they needed to move on a lease, and if they weren't going to move on it within those couple of weeks that we had the transaction, they were going to lose it. So
well, and that's exactly what happens, right? As a business owner, you have opportunities that pop up. In this case, we had a gentleman who owned a large distribution company, right? A wholesale distribution and transportation kind of company, where he literally had the opportunity to lease the space next to his. Right. So he has, let's call it, 1 million square feet. Right. This space was about 2/3 the size of that. Right. So he had the ability to add 2/3 more storage right next door. Right. Think about that as somebody that's in shipping, logistics, and distribution. That's huge. Right. So now you can store more, you can wholesale more, you can transport more, and ultimately you can make more. Now, here's what what Nick is explaining about the timing, right? In this scenario specifically, I remember understanding that this customer was able to get this deal simply because the deal hadn't actually even made it to market yet, right? This was kind of like one of those things where he knew the neighbor, and the neighbor was like, "Hey, I'm going to be putting this space on the market," and he was like, "Wait, whoa, before you do that." Let me see what I can do here, right? And ultimately, within just, I think from open to close for us, the transaction totally was about 10 days from the first day that, it hit our system to funds actually in the business checking account. And now what's awesome about that transaction is not necessarily that one transaction, guys. It's the fact that, hey, now our partner looks like a rock star to their own referral partner, right? Because they were able to get a deal done that really nobody else could. We were able to get done a deal for a partner that is a longtime partner of ours, right? One thing we would hate to do is not be able to fund one of his deals, right? It's always tough to tell him no because we fund so many yeses, But no, I really just want you guys to understand it's so much bigger than any one deal. And this is where I'm going to kind of kick it down to you, Ryan. Ryan got one of the most awesome reviews that you can get from a referral partner today. 5-star Google review. If you don't believe me, you can check it. Head on over to Google Rock Financial, click reviews, go to latest. You'll see Ryan and Trevor from our team got a really awesome review. But Ryan, tell me a little bit about that. Why was it such a big deal, even though, it was just $100,000, right? We're not talking about 4.5 million anymore. Now we're talking about 100 grand.
Yeah, of course. So the partner was is a credit repair consultant that I've been working with over here for about 3 years now. And the business owner was a restaurant down in Texas. They only had about 1.5 years time in business, and they weren't able to get approved with their local bank. But I got a call this morning. She got woken up by the client at 7 o'clock in the morning, practically in tears, because she was able to get that $100,000. So, an experience like that, be able to, help the client as well as help the partner, help her client. it just makes your day. So that's really why we do business the way we do it.
100%. And this just really goes into, our mission of helping business owners, right? Like at the end of the day, it's that special time of year, right? Where, you certainly want to be giving back or, and you start to really be thankful for what you have, right? This business owner, they went to their local bank. They were declined for $100,000. Greg, you and I both know why. It's because you're a restaurant with less than 5 years in business. There's no bank in America doing that
Yeah,
deal.
absolutely. I remember this deal specifically. The business owner was actually using the money to buy out a 50% partner and now have 100% of this business going into the new year. So she was super ecstatic, very, very helpful that we were able to help her out very quickly.
Yeah, absolutely. And, again, it really just goes back to like the impact that $100,000 can make. Right now, you see where this business owner is able to get that silent partner out of the scenario. They're able to take over. Hopefully, the next time they borrow money, it's to open location number 2, and we can start to really grow their business. I'm going to jump over into the Q&A a little bit here. Let's see if we can pull out some questions here. We'll go some rapid fire. Greg, this one's for you. Do you do loans in other countries, Belize or Mexico?
Yes, I think Paul asked that question. Unfortunately, we lend in the 50 states, can be Hawaii and Alaska, but none out of the country, has to be in the US.
Awesome. I see. How can local banks help you? What a great question. How can local banks help you? Greg, go ahead. Start us off with that one. I feel like we all got a little bit of an opinion on that. So you start us off.
Sure. So first I'll say we can always help the local banks. How can local banks help us is by referring those clients that unfortunately may not fit that bank criteria. Or sometimes they may qualify, but to the point earlier on Nick's deal, they may not have the time to wait that 4 to 6 or 8+ weeks to qualify for bank financing, or even have the financials necessary to qualify for bank financing. And banks love us because we help keep that depository relationship intact, where we're not a bank, right? We just simply want to help that business owner get access to capital and quickly. So we'll always keep that depository relationship intact with the bank. Because a lot of times what happens is those business owners, they may not have the time, or Chase down the street is saying, hey, we can get that loan done for you. Just send over your depository accounts. They wind up switching that bank account. 3 to 6 months later, they're still declined, unfortunately, whether it's for credit, industry, time in business, lack of collateral. So we help facilitate that, and we can create a good working relationship in that manner.
Yeah, absolutely. And realistically, what it comes down to is, as somebody that's at a local bank, you're going to get all of these questions and scenarios where you're probably not able to help a bulk of that time, right? So if you really want to know how to help us, I think it's taking the time to understand how we might be able to help those types of customers. Right. There's always scenarios where, it comes up that, hey, this person is looking for this, but they have that, and they have all of this criteria and this credit score. And, there's always a story, right? For us, we want to give you the facts. That's really what it comes down to. We want to share with you how we're able to help these small business owners, but also what are the facts, right? Where can we kind of, get rid of the clouds for a second, right? So things like they need a business checking account, right? Like, from time to time, there'll be referrals that are referred to us that don't have a business checking account, and all of our banks and lenders, right? That's like an automatic no for us. And I would hate to have to give you that automatic no, right? I would rather that be something that we were able to communicate on the upfront and really just try to understand each other. And then how can we be a good partner in return? We have a really strong referral network. As you guys can see, there's hundreds of people on this call. There's hundreds of questions piling into the Q&A right now. So we're really here for you guys, right? So how can we connect you guys amongst each other, right? If we have a merchant processor partner and a business banking partner in both in Denver, right? Like we want to help you guys make that connection and do business together. If everybody's business is growing, if all of if every, what they say is one hand washes the other, but both wash the face, right? So you want to know how to effectively work with us. Well, let us help you, right? The more you tell us, the more we can really help you back in the other direction. Guys, once again, if you have a second, would love to just remind everybody, if you have questions, please put those in the Q&A. Good question here. Nick, Ryan, I'm going to start with you guys on this one. What types of loans do you want to do? What types of loans do you want to do? The only loan that I submitted to you is something that you don't do. Shout out to Bill on the question. Sorry that we weren't able to help in that one scenario. But Nick, let's start with you, man. What are some of the bread and butter deals that you see, right? Or what are some of the ones that when you look at, you got a good opportunity on your hand? Because I'll be honest, this is probably one of my favorite questions, right? Yes, we can lend from 5,000 to 5 million, but where are we good? We can do deals in every industry, but what are the best ones?
For sure. We as you guys know, we do a lot of everything, right? But there's those bread and butter products that we really offer where we're seeing the highest conversion and highest essential closing percentage, right, for partners and clients themselves, right? And what the particular products usually are working capital, term loans, and credit lines. Typically, volume wise, anywhere between, like Tony said, we do 5,000 to 5 million, but a big bulk of our business falls between 100 to $250,000, right? And really what we're looking for is businesses that are actively cash flowing month over month, producing revenue. Even time in business, it's important for us, but it's not we can help as long as you've been in business for 6 months plus, right? We're not like these banks that are looking for 2 years time in business. So, we do a little bit of everything, but as far as volume wise, we really need to see somewhere in the range of 10 to 50,000 is where our bread and butter, I'd say, would be.
Yeah, absolutely. And now, Ryan, just kind of kicking it over to you for a second, in terms of dollar amount, I think Nick really nailed it on the head, but like, is there industries that perform better than others, right? Like, what are some of the top industries that you see partners getting most deals funded with?
Yeah, certainly. I mean, just like the one today, restaurants, great industry. With a revenue-based program, your businesses that have the great cash flow, but maybe they're a newer business or their credit isn't there. That's usually a great opportunity, especially in the restaurant industry, as well as retail shops. Medical healthcare is a great industry. Could be manufacturing, construction, trucking. We do a ton of.
Greg, help him out. What else?
He's rattling them off, but just to get the juices flowing here. So trucking, construction, specialized construction, like HVAC contractors, roofing contractors, electrical contractors, medical could be your primary care physician, surgery centers, your like stat health, but the walk-in clinics.
Yep.
Manufacturing, import, export, e-commerce, retail, really any industry. It's kind of easier to say the industries that are more restricted than the industries that we do service, and that would be your used auto sales, your buy here, pay here type of places. The other restricted industries are going to be any kind of adult or vice industries. We can do cannabis. I feel like that question would come up, but we are able to service cannabis and marijuana in those states that it's currently legal.
Easy. They asked if we could fund it, not if we could do it. No, I'm just kidding. I'm kidding.
That's both worlds.
I'm kidding. Yeah, I'm kidding. Really, guys, what I would say, just to kind of summarize it, the best thing that you can do is if you know that you have a business that's been around longer than 6 months. Nick really hit the nail on the head when he said, as long as that business is making money or cash flowing, we use that cash flow to determine how much money they can afford, right? So industry doesn't really matter. Time in business doesn't really matter. In fact, their personal FICO credit score doesn't really matter. Now, if you're talking about, hey, I want to access millions of dollars, right? I want $1 million or I want $2 million, right? Let's talk about that for a second, right? Because I think it's important to really kind of show the difference, right? And we'll take a step further and we'll even dive into equipment financing in a second here. But to start, right, if you're talking strictly, a term loan, a working capital loan, or a line of credit, $500,000 or $1 million, right, $1 million type of transaction, what's the difference there, right? Do some of these things start to be factors, right? Like for example, credit score, right? What's the minimum credit score that you could have to go get $1 million? Go
I
ahead.
want to say probably about 600, 620 minimum.
Yeah.
Nothing too apparent on that credit score, like super recent charge-offs or recent latenesses in the mortgage or anything that wouldn't be too alarming. But if it's things like utilization, it's not going to weigh a huge factor into it. And we can, a 600, 620 FICO would be fine.
Yeah, absolutely. And there's always compensating factors, guys, right? So if you have somebody that's a 599, it's not a hard stop at 600, right? In fact, a lot of times we see somebody who will tell us, hey, my projected credit score is, 580, and it comes back and we pull a 610. Why? Because they're looking at like Credit Karma, where they're showing a Vantage score, and we go in and we're actually doing a pull through Experian of their FICO 8, and that is reporting at a 610, which is actually higher than the 600, right? So a lot of times, it really does come down to those other compensating factors, right? So if they're going to get access to $1 million, right? How much does that company probably make annually in revenue?
Realistically, they're probably going to need to be around that $8 to $10 million a year in revenues.
And even more than that, right? Like if you're doing 15 million, $20 million, you're probably looking at like $1 million or $1.5 million, right? Like and these are super rough numbers, guys. This is not to be taken in written in stone, but it's more just to give you an idea of how do these types of businesses afford this. Well, if you're going to go get $1 million, it's because you make 750, $1 million, $1.2 million in the last 3 to 6 months. Again, please throw those questions into the Q&A here. This way we can make sure we get those questions answered for you guys in a timely fashion. Really just want to dive into everybody's questions, but I do know that we're gonna run out of time before we get to everybody. So definitely appreciate you guys for the answers too, man. I know it's I'm kind of putting you on the spot here and choosing who's answering what, but I think it's important.
I see a good one that I want to touch on. Dennis Adams, if a business is a turn down, do you tell the partners why? 100%, Dennis, and that's a great question.
What a fantastic question, and I'm glad that you pulled that one out of there, because that's how we educate our partners, right? That's how we know. And really, what I want to add to that, right, is we're here to make sure you understand what the current landscape of commercial financing is, right? If we did this same thing 6 months ago, we wouldn't even really be talking about $1 million loans, because we weren't getting all that many $1 million approvals and loans done, right? Right now, though, in the last few weeks here, we've really seen the economy kind of change. Things are turning the corner. I'm not going to bring up what happened last month with the election, but I just want you guys to know that changes everything for people like us in the seats that we sit in, right? So it's important that you guys understand, hey, everything matters, right? And Rock is here to make sure we have the education behind what's happening and why it's happening, right? So if somebody does get declined and we're not able to help, or if we get a deal approved and then it gets declined, right? Because that happens, right? Where somebody gets, a pre-approval and then ultimately on the background or something comes up, we're certainly going to share this information with you guys, because it educates you guys, but it also lets us help set a good expectation for you guys as to what you should, look for going forward. Right. We want you to rely on us as a resource for information. So definitely appreciate that question and questions like that about, hey, why does this deal work the way that it does? And how can I make that work? I did promise a little bit of information on equipment financing. So before we jump back in here, I do just want to touch on that product for a second, right? Because on the opposite end of the spectrum from a $1 million business loan, right? For an existing business, you have that age-old question of, can you help startups, right? And startups is a unique term for us because we do, if you ask a banker, we do help startups, right? To a banker, anybody less than 2 or 3 years in business, they're going to be a startup business. For us, we look at a startup as anywhere at less than 6 months. Like Nick mentioned before, we want to see that cash flow for 6 months. That allows us to lend on their cash flow. The one caveat where we don't need that 6 months of cash flow is in equipment financing, right? And in equipment financing, there is a specialized product where you can get up to $50,000 of equipment for a brand new business. Greg, can you go into that a little bit?
Yeah,
so that I
sure.
can take a sip of water and catch my
Absolutely.
breath?
Yeah, so I was just going to mention up to 50,000 for those, true startups. So if you have an auto repair company that's looking to finance 3 or 4 lifts for their garage, potentially a tire machine, things along those lines, up to $50,000 for that true startup business.
Awesome. Good information. And yes, this will totally be, I saw a question here about it being available in replay. This will totally be available in replay. So shout out to you guys if you had to join late or you're leaving early. If you were registered for this, you'll get a copy of it so that you can see all the great answers that we were able to provide. Really quick question here. Do you guys provide personal loans? Greg, I'm going to let you answer that one.
That came from Dale. Unfortunately, we do not do personal loans.
Let Greg let people down. I don't know if you guys noticed that.
It's all right.
No,
I'll
I'm
be
just
the
kidding. Go ahead. No. We don't do personal loans.
No, we don't do personal loans, only business loans.
Yep, exactly. Are all loans collateral based? I know we kind of touched on this, but I think it's probably good to kind of put out there in black and white terms. Nick, are all of our loans collateral based?
No, almost none of our loans are collateral based. And, looking into the cash flow, that's by far the most important thing to us. So being that we're analyzing the cash flow, there's no need to involve assets or collateral to it.
Sorry, it was just a comment. It says, it almost sounded like you're saying the more expensive monies can actually boost your ROI due to the speed of funding. And then it says, no, that's not a question. So I'll take your answer off the air. I have no problem answering this one kind of on the air. I think ROI is a moving target. Right. When you talk about cost is also a moving target. It's not simply just cents on the dollar or a percentage interest rate. Cost can be timing, right? If you lose out on a deal because you don't have the ability to take advantage of that, right? If you think about a lot of companies right now in the retail industry, we're just borrowing a lot of money from us in order to buy bulk inventory going into this season here, right? When they buy their inventory in bulk towards the end of the year, they're getting discounts on that inventory. So a lot of times those discounts come at such a steep discount that the cost can come at a little bit more of a premium when they're able to take advantage of those things. So one thing I can certainly tell you is all of us and everybody that works for us, we're taught that dollars make sense, right? So we're all about what deal actually makes the most sense. If there's a way that somebody can take a better transaction elsewhere, we would totally tell them to, because that's just good business, right? Number one, and potentially when they need us in the future, they'll think of us because we gave them that right answer or that good information, right? At the end of the day, for us, our jobs are to be consultants, and that doesn't mean that we get the close every time, right? In fact, our closing ratio is 40% a lot of times from approval to funding, right? So it's not always that the bank declines somebody that they're not taking the deal. Sometimes it could be that, hey, timing is no longer where it needed to be, or hey, this cost isn't where it needs to be. We see it day in, day out.
Absolutely.
Who would you speak to at a bank or credit union? Great question here. Stephen asks, who would you speak to at a bank or a credit union? Would it be the branch manager or a banker? Who would you speak to? This is a great question. And I'm glad you asked, Stephen, because I was actually doing a call yesterday, and, the gentleman I was doing the call with, he has a very large network as well. And he was talking about the tellers and how he, at his local bank, would develop relationships with the tellers. Now, I'm not saying that you want to go have a relationship with every bank teller in America, right? For me, if I'm going to look for every one person, I'm going with the business banker, right? If I want a relationship with every one of them in America. But I think if you're just simply talking about your local community, it's really anybody that's customer facing. Right. It could be their teller. It could be the business banker. It could be the branch manager. It could be the relationship manager. But somebody that's actually talking to the customers directly would be who I would target. Anything you guys want to add to that one?
Yeah, most of the time the relationship manager.
Most of the time, relationship manager.
Yeah, it could be anybody who's communicating with potential business owners on a daily basis, right? So a lot of times we get branch managers, we get regular business bankers, tellers. It could be really anybody.
Yeah, tax professionals, CPA offices, they'll often work with more than one business, right? And file a lot of returns and work with other companies to strategize their financial goals and look at their overall financial health, and would be an advisor to that business. So it's not just limited to bankers as well.
No, great point. Greg, I'm going to let you kind of take the lead on this question from Dennis. It says, can we lend funding for heavy transportation to new companies with customers and or relationships or partnerships that show projected income?
That's a great question, Dennis. We can. So we can lend for equipment financing if a trucking company is looking to add on to their fleet, add vehicles, or do need working capital or a credit line. So, we have multiple products available. Transportation, there's a lot of factoring that is very heavy in the transportation.
And what is
industry.
factoring? Can you break that one down?
Yeah,
Because that's
great
the
question.
one that I was kind of thinking.
Yeah, for sure. So factoring is if a transportation company, let's say, is hauling for Walmart. Walmart's a big company, and they're going to take 60, perhaps up to 90 days to pay that invoice. But that small business owner doesn't have 60 to 90 days to get paid. So a factoring company or an accounts receivable line will purchase that invoice from that trucker for cash upfront. And then as Walmart takes its time to pay that invoice, they'll collect a fee depending on how long it takes for that invoice to be paid. And then once that invoice is paid, the rest gets forwarded back to your business owner.
Absolutely. And now, can a new transportation company qualify for that?
They can, yeah, as long as they have receivables, and the receivables are business to business. Those receivables cannot be business to consumer, has to be business to business.
Awesome. Great question. See a couple duplicates in here. Do you finance business acquisitions? And if so, are there any additional requirements that we should look for?
Sure, James.
I think this is such an awesome question because of really just the time that we're in, to be honest. We're in a time right now where I think the statistic is 17,000 baby boomers retire a day, and 2/3 of them own businesses, right? So you're in a time right now where there is a lot of acquisition going on in the finance sector, right? And I think that's why we get this question and the startup question so much, right? Like, the acquisition thing is awesome, for those that are buying a business, right? But there's also a lot of business owners, or a lot of those solopreneurs or those with an entrepreneurial spirit that are getting started, right? So I think we're just in a unique time right now where you're getting a ton of businesses being created every day, a ton of businesses being sold every day, a ton of people retiring. And we're just in a time right now where, people know that there's advantages to being a small business owner, right? You can take tax advantages potentially. There's different advantages that you could take depending on what you do, right? I would like to think if you own a restaurant, you probably have decent dinner every night. You know what I mean? Maybe that's just a perk for me. I don't know if Greg thinks that's a perk, but I know I do,
You're a good cook, yeah.
As long as you got a good cook, you're right. But no, when it comes down to it, right, I think business acquisitions, they're so broad right now. And why I say that is because we're seeing a lot of these deals get done through seller financing, right? And I don't want to go off on like a tangent about business acquisition, but what seller financing is basically putting a value on that company and then allowing the business to kind of pay off the note itself over the next 3, 5, or even 10 years, right? Where there's like a lump sum that's due in the beginning, right? And then the business kind of pays off the note through the years. And this is how we're seeing a lot of transactions come in the front door, right? Where we have a business broker or somebody that, that is, somebody that's trying to refer that type of customer that is buying a business, right? So if you have that type of scenario, we're all about it. We would love to help you out in that scenario where there's so many different moving parts, but a lot of times we're seeing, customers who are, sons and daughters taking over the business from their parents or maybe an aunt or an uncle. We're seeing scenarios where, like Ryan mentioned before, the scenario where they're buying out that silent partner, right? Where, hey, we're gonna that money person that helped us get started, we're gonna get them off the books, right? So there's a lot of different scenarios that go into business acquisitions, right? But Nick, I'm going to kind of turn to you for a second. Like, what would you kind of add to that, right? Like, what are some things that you would look for in like a seller financing scenario or a business acquisition scenario? Like, what is something that you would think there? And I know obviously if it's true, hey, this person has no experience, well, they need experience, but if they have no business currently, we're looking strictly SBA. But like, if we're getting creative here, be creative for me for a second. Like, how would you get a deal done?
A big part of it is a good indicator of deals that we can get done is if they've been involved in the business before, if they've had experience, or if they've had a managerial level of running this type of business. That's something that they definitely look into. Down payments also can help them get a little bit more creative, right? If they're willing to put a little bit more down for the acquisition. And but really the big thing is experience, and it doesn't have to mean you were an owner at one point. It could just mean that you've been involved in the business for 5 years and you're purchasing it from maybe an employer. And that's a big part of it.
Awesome. I see we're almost at 2:50 p.m. I know we had a couple of minutes of tech difficulties in the beginning. So if we go over by a couple of minutes, I don't mind, but I don't want to keep people here all day. So let's try to do a little rapid fire question section here. I see Dennis's question popped up in the Q&A, so I'm glad there it was. Look, he even put it in the Q&A for you, Ryan. Where'd the co-branding one go? Of course, I just lost it. How does co-branding work with Rock Financial? I'm going to let Ryan answer that one. Co-branding, Ryan, jump in.
Yep. So that's another one of my roles. So is making sure you're all good in the portal. Our portal is built out for you guys to have your own landing page through an affiliate link. So basically all you have to do is upload your logo into that landing page and it'll automatically co-brand that URL that you have. So you can even choose that to be white labeled if you want. That's completely up to you guys. Not only does that co-brand your landing page, but also any of the marketing material, program flyers in the portal automatically done for you.
Great question. Great answer. Nick, this one's for you. How many MCAs can you consolidate in a refi, if you will?
So yeah, I mean, it really depends on how many balances there are, really who the balances are with and what's owed, right? But we can go up to 2. 3 gets a little tricky unless they're really small. But again, it's going to really depend on how much they're grossing. If you have a large company that has doing a ton of volume and a lot of these MCAs are falling off and they're smaller, I would say up to 2.
Awesome. Great answer. Sorry. So it's a little finicky over here. A lot of repeats. Again, guys, just so you know, this will be available for you. We will be sharing the presentation. I mean, not the presentation. There was no presentation. We will be sharing the recording with all of you so that if you might have missed a question or two, we can get that over to you guys. Definitely appreciate you guys rocking out with us and asking the questions here. I see a lot of questions around real estate, in and around real estate. So let's just take a minute or two to kind of touch on those products for a second. I'm going to draw a line in the sand for you guys, right? And this is the way that I think of it. And I think everybody should think of it because I am selfish and I think everybody should think the way that I do. No, I'm only telling you this because I think it's allowed me to simplify real estate lending for myself a little bit. On one side of that line, you have owner-occupied commercial real estate. And what that means is the business itself occupies 51+% of the square footage of the building that they are in, right? So for example, if there was a 100,000 square foot building, they would need to operate out of 51,000 plus square feet, right? If they do that, right, if they are occupying their space, there's two products, right? They can purchase that building and we can get them a commercial mortgage to do so. And then the second product would be that they are refinancing that building that they actually already own and are operating out of, right? Those are kind of the two products inside of owner-occupied commercial real estate. The flip side to that, and not to get into the fix and flip world too quickly, but the opposite of owner-occupied commercial real estate is simply just investment real estate, right? And when I say investment, I mean all of it. I mean all of it. I mean everything from 1 to 4 family investments. So I saw questions about like, can you finance a single family home? Not if it's a primary residence, but if it's an investment property where they are either fix and flipping or buy and holding that property, we certainly can look at that opportunity for them. And really, the sky's the limit there. It could be a mixed use property. It could be a commercial building, right? Any type of property, any type of transaction, we can certainly take a look at. I do want to circle back on one thing that Nick mentioned earlier on, like our bread and butter customer clients are business owners that are taking advantage of working capital solutions within their business. But if you come across investment opportunities or investment real estate opportunities, or even owner occupied commercial real estate opportunities, we still want you to think of Rock Financial because we can get these transactions done for you. We have a long track record in doing so. Greg, I'm sure you want to add to the commercial real estate talk there.
I mean, I think you hit the nail right on the head, with owner occupied versus everything else. So I just want to echo that point. And all to Tony's point, where owner occupied 51% of that building square footage, whether that's a purchase, a cash out refi, and then on the investment side, if it's a residential property, it just cannot be a primary residence. We can do cash out refi so long as there's enough equity there. Again, if you have specific deals, we're more than happy to talk through it and figure out what can and what can't qualify.
And really quick, just one final point on the real estate transactions. Our minimum transactions are typically like $350K on the value of the property and $250 on the loan amount. So just so you guys have a good idea, we're not doing any of these very, very small deals, some of them that might be $70,000, $80,000 investments. We're able to help on a little bit larger of transactions and certainly excited to do so for you, where applicable. This is a good question, kind of piggyback to, I guess, the transportation question before, but can you do factoring for staffing agencies as well?
Absolutely.
What'd you say?
Lamel works with me and Nick.
Oh, nice. Look at that. Shout out to Lamel. Works with Nick and Ryan, and great question. And we could certainly help staffing agencies with factoring or an accounts receivable line or any of the other products. Staffing is one of the stronger scoring industries, right?
Especially for factoring, yeah. Transportation, factoring.
They usually have a lot of receivables, so.
Yeah.
Love it. Love it. Love it. Great question here. How can we connect? Really quick, if you are interested and you are not working with Rock Financial, right? If you are not working with us, you are not actively referring business, you are not actively signed up, please, in the chat right now, write "Let's Rock," and my team will reach out to you. That's "Let's Rock," and the team will reach out to you. We're gonna utilize the chat to reach out to you guys after this, right? So if you are new to this, you certainly can just throw in the chat "Let's Rock." We will get you guys rocking and rolling, as I love to say. No, and if you're just looking for more information, products, this, that, you can click the link that Jen just so graciously dropped into the chat for us, which is rock.biz and the Partner Center. Definitely excited to get a chance to work with all of you if we're not currently working together. If we are currently working together, you can do one of two things. You can send an email to info@rock.biz and we will get your point of contact to reach out to you. But if you know that Ryan's your point of contact or Nick's your point of contact or anybody else on the team, feel free to shoot them an email or a phone call. I know that they're ready to rock and roll for a strong end of the year here, and definitely excited to be on with you guys. Really appreciate everybody joining and everybody being on the call today. If you have to jump, I know we're right around that 3 p.m. deadline here. Let's see if we could pull a couple more questions out before we go. Looks like Lamella asked another question, a follow-up. At what % do we factor? And I think that that's a great question. So if you guys can answer that one.
Yeah, sure. So when you're talking about an AR line or invoice factoring, typically on the upfront, the customer will receive anywhere between 80 to 85% of their receivables on the upfront. And then the 80 to 85% of the receivables on the upfront. And as those invoices are paid, you're talking about a cost of 1.5 or so, 1.8% per month. And typically with standard, maybe around 10 basis points for every 10 days after that period, until that invoice is paid. And then that remainder is given back to the customer.
Any last minute questions, guys, you want to throw into the Q&A here? We will get answered for you. And we'll try to, if we don't get to your question, we will also try to reach out to you and answer your questions after this if we didn't get a chance to answer your questions. Who do we need to get in contact with for commercial funding? Really just your point of contact. We can all help you out. And if it's not that direct point of contact, that's, your point person for that specific scenario, we'll always get you into the right hands with the right person speaking about what it is that you're looking for more information on. I see a quick question here about what is Rock's schedule over the holidays. I appreciate Elena for this question because I would have forgotten to mention. We will be closed next Wednesday for Christmas. We will be closed the following Wednesday for New Year's Day, and we will be closing around 1 p.m. Eastern Standard on both Christmas Eve and New Year's Eve. So we look forward to working with you guys in all the hours around that. That's for sure. But definitely appreciate everybody joining us, all the questions, all of the interaction, and more importantly, the patience. I know getting going today wasn't easy. So thank you guys for rocking out with us. Definitely excited to get a chance to interact with you guys. Really quick in the chat, if you enjoyed this style of webinar and not just me reading off a screen at you for a couple minutes, let me know and we'll do another one of these Q&A sessions here in the future. But let us know in the chat if you enjoyed this one. Otherwise, we wish every one of you guys a happy and healthy holiday season on behalf of the whole Rock family to your family. And we look forward to rocking out with all of you guys in 2025, bigger, better, and always rock stars. Thank you, everybody. We really appreciate you guys. And Merry Christmas and Happy Holidays again. Thanks, everybody.
Thanks all.